What are the best ways on how to invest £1,000? A complete advice guide for the UK. Woohoo! Congratulations, you got £1,000. That's great, Adventago, but what should I do next? Today I'm going to share with you 8 of the best ideas for how you can invest £1,000 so that it can work for you and help you achieve some of your future goals. It's not too difficult to make £1,000, especially if you're leveraging the internet and you're selling products or services that don't require you to always be there. However, once you've got that £1,000 saved, most of us get super protective about it. We leave that money in our bank account or dig a massive hole and bury it in the garden. This can sadly lead to it being stolen, lost, or inflation eating it away. How should you invest your money in a way that money does the work for you and improves your life? Let's dive straight into what are the best ways on how to invest £1,000, a complete advice guide in the UK. Number 1, and I know you've heard this one many times, more than 1 million probably, and that is number 1, invest in yourself. Your brain and body are the most important assets that you have in your life. By investing in yourself, I mean focusing on your personal development. For example, doing some specialist courses to move forward in your career, doing some external learning around languages or things that will add value to you to help you become more productive, creative and valuable so that you can create more money over time. £1,000 goes a very long way towards helping you do that. For example, things like buying books. Doug has a bank account called his education fund. He allocates a part of his money into that fund. So when something interesting catches his eye that could help him excel in this company, he can buy it no matter the cost. Reading for me has been the most life-changing hobby I've ever taken on. In fact, I wouldn't be doing this right now if it wasn't for the books I have read on my journey. Investing in yourself is by far the best way to invest your £1,000. By the way, click the link in the description right now to discover the top 9 list of best-selling millionaire books that you must read if you want to become a millionaire and beyond yourself. The link will be in the description down below. Number 2, invest in a coach. There are many people out there who are coaches, and it's for good reason, because what a coach does for you is 2 things. 1, a coach helps you get to where you want to go a lot quicker. You're not spending a lot of time making mistakes, which is often costly and super depressing. If you find the right coach, they can give you a massive boost and hand you the answer you need to the problem you're trying to solve. Also, they can help you get unstuck. A coach is great for building relationships. That's 2. Those people have been on a journey of self-development themselves. If you know someone who is amazing at a particular thing, they might be the right person to invest £1,000 or up to £1,000 in whatever they're charging, because you're not only getting to solve your problem, but you also get a relationship which might be a lifetime value, and that might open lots of doors for you down the line. 3, invest in index funds in the stock market. An ETF stands for an exchange traded fund. Index funds and ETFs are a low-cost way to gain access to the stock market that differs from investing in individual companies. The difference is an index fund or an ETF helps you reduce risk massively, because rather than putting all your eggs in one basket, you're investing across a broad range of companies. Typically, my recommendation will be to invest in an index fund that tracks a broad index. An index is a list of companies. When you hear things like the S&P 500, it's a list of the 500 biggest companies in America equities market. In the UK, we have things such as FTSE All Share Index, which is a broad list of companies, whether it's the largest, the FTSE 100 or the FTSE 250, and smaller companies. The FTSE All Share Index includes a broad range of companies. When you invest in an index fund that tracks that particular index, it gets invested in a piece in all those companies. The best part is you don't need a ton of money to do this. You could try investing £300 or the full £1,000, and you can do it gradually to make sure you are learning the process and observing how it works. The good thing about investing across a broad range of companies is if one company doesn't do well, a bunch of others will do well, and over time, the research shows that you're guaranteed to generate a good return. Usually the markets return typically in the range of between 10% on average per annum, if what the research has shown over the years still is applied. Number 4, invest in dividend-paying stocks. The risk there with investing in individual companies is that you're putting your eggs into one company. Even if you're investing to generate dividends, the risk is still there. If they don't perform, you could lose your money. The key is to focus on blue chip companies. These are large companies. They tend to have a lot less volatility because they're so big in terms of their market capitalization. You tend to find that such companies stand the test of time, and so blue chip companies that pay a dividend are a great option for investing your £1,000. However, I have something awesome to share. You can still have diversity and dividends by investing in dividend-paying ETFs. These are a pool of companies that all pay dividends, so you get the best of both worlds. If you would love to get the whole package, then I highly recommend Tastyworks. From a sophisticated trading bot to multiple cryptos you can buy from to a place where you can earn cool cash bonuses, Tastyworks has it all. The fees are low, the investing platform can tailor for beginners, amateurs and even professionals, and the customer service is super fast to respond to your problems. I couldn't ask for a better platform to trade on. One thing that annoys me the most with these types of stock brokerages is that there is no transparency and the documentation is impossible to read. However, the great thing about Tastyworks is that there are real names and faces behind this stock brokerage and the legal documents are clear and understandable. Click the link in the description now to claim a cash bonus when you sign up today and start investing for your financial freedom. Number 5, peer-to-peer lending, P2P for short. Peer-to-peer lending is interesting because it's been growing quite rapidly within the last decade. What's interesting about it is that when you invest in P2P, peer-to-peer lending, you're lending money for projects to a company or business. What they tend to do with that money is go out there and do things like property investing. What you technically have is that the thing you're investing in is a loan with fixed terms that generates you some form of interest over time. What's unique about peer-to-peer lending is that it sits between the savings you have in your bank account in terms of risk and investing in individual companies, such as investing for dividends in a specific company. It's not as risky as investing in an individual company, but it's not as non-risky as investing money in your bank account. At least you are getting some form of return by peer-to-peer lending to compensate for things such as inflation, which eats away at your money bit by bit, if it sits in your bank account doing absolutely nothing. There are many platforms in the UK that give you access to these opportunities to generate returns, in some cases up to 10% per annum, which is fantastic when you think about it. Number 6, invest in a pension. A private pension in the UK usually refers to a SIPP, S-I-P-P, which stands for Self-Invested Pension Plan. Is a brilliant way to invest your money because usually when you put your money into a pension, such as a private pension, it's a tax efficient environment. What happens in the UK when you put your money in, if you're a basic rate taxpayer, the government gives you back the tax that you paid before you generated that net income that you paid into your pension. Imagine you've got money in your bank account from a salary, it goes into your bank account and then you say, okay, I'm going to put some money into my private pension, into my SIPP, SIPP. The minute you do that, the government gives you back the tax that you suffered. For example, if you put £1,000 in within a month or so, you should get £250 back into your account. You've suddenly gone from 1,000 to 1,250. The real cost of investing that money, putting that money in really is £750. You are quite ahead already. If you're a higher rate taxpayer in the UK, you can also claim another £250. You go from putting £1,000 into ending up with £1,500, and this is before you've even invested that money within your pension environment. And once you invest that money, the returns that you generate are again tax-free. Number 7, invest in a business or a side hustle. I love side hustles. In fact, I'm doing one right now. They have completely changed my life. The fact that you're watching this video is a good example of how a side hustle can work out. I started my company Adventago.com with less than £300 and I'm doing pretty well for myself. PS, if you would like to use my affordable, reliable and easy to set up hosting service plus website builder, then click the link in the description down below. It will be there. It's taken a lot of work, make no mistake, but the thing is, the capital that was required to get going in order to create something that generates an income over time was very little. Business and side hustles are an amazing way for you to invest £1,000. If you are interested in this idea for how you can start a side hustle or business, then click the link in the description down below for my 2 articles, one of them being called Best 10 Online Business Ideas You Can Start With No Money, Fast Ways, and the second one, Top 10 Best Side Hustle Ideas to Make Money That Pay Well. They'll be in the description down below. These are practical ideas. I've explored a lot of them. You can take some of those ideas away and get started right now. The key is consistency. It's not the money, it's more the consistency, putting in the time and effort day in and day out. Number 8, paying down some debt. Most of us have debt, credit card debt, student loan, mortgage, or you owe a friend some cash that you forgot to give back. £1,000 can go very far in the same way that you might generate dividends for investing in shares or index funds or ETFs, which can compound and grow over time. Interest on your debt also compounds and gets a lot worse over time. Because the debt grows over time when interest is added and late payment fees, committing your £1,000 towards paying down debt, whether it's focusing on the most painful debt first, for example, credit card debt is notorious for having high interest rates. Focusing on a credit card debt, for example, and paying that down with your £1,000 is a good way to generate a return. Because what you're doing there essentially is saving a ton of interest. You could also commit it to overpaying on your mortgage, which is one way, without a doubt, you can work towards the goal of financial independence. There you have it, my lovely Adventago family. By the way, I would love to know, how would you invest £1,000? Please leave your thoughts in the comments below. I'll reply to every single one of you. I pray you all have a happy day, and I will see you next time in another post. Don't give up on your dreams, and bye for now. Bye!